If you took the same gold price of 33.75 and divided it by 7, that's what it's coming out of the ground at $482. I think it's the value of a generation, Adam, and so do a lot of people, I think, at a much higher level than you and I, and that would be, um, for example, uh, the big money that just brought in more silver on the May contract than ever has been delivered into COMEX. Wasn't so easy for me to say. What I'm trying to say is whoever is importing all this silver just brought in the largest delivery in the history of the COMEX on the May contract. Same thing in gold, by the way. But this is a phenomenon that we are seeing really unfold. One of my favorite guys to follow on Twitter is his nickname is King Kong on Twitter, and he's fantastic. And he's in Hong Kong, and he talks about how China is gobbling up everything and using it in terms of playing the long game, acquiring it for their country for years to come. They're the second largest producer of, his name's Eric Young, by the way, and the second largest producer of silver in the world. And they're flying all around South America buying doré and concentrate from Latin American miners, disintermediating the marketplace. So here you have the second largest producer in the world who is flying all around Latin America buying unrefined silver right from the miners so that the market doesn't have any idea how much they're buying, paying double what the West will, shipping it back to China and refining it. You have Russia, who has openly said they're adding it to their strategic stockpile. You have India, has bought over 900 million ounces in the last 5 years. That's more than the COMEX and the LBMA combined. And now all of a sudden you see these massive deliveries coming into the COMEX market here in the United States. This is crazy what's happening. And the price is being held down on levered futures contracts, where in London you have roughly a 290 million ounce float, the amount of ounces that are there, but they're trading 2.9 billion ounces a day, 10 times annual global, 10 times the float, 3.5 times annual global mine supply. They've been able to hold down the paper price. And we've talked about the why, the military industrial complex, and the need for silver and high-tech weapons. But I think when you see these kind of deliveries into COMEX, that reeks of something much bigger than we are being led on to believe. Now, in terms of its technical pattern, we're at almost a 20-year cup and handle formation. And at $35, you're kind of at the bowl, right at the tip of the bowl before it breaks out, the way gold already has. We are right there. Doesn't mean it's going to happen yet. The cartel who's been holding down the paper price for a very long time is more powerful than I would like to admit. But being naked short in this market is as dumb as a mud wall and an existential threat to a lot of these companies. So I don't think there's anything that I've ever seen that offers the asymmetrical risk reward profile that silver does. In terms of downside, I think it's as muted as anything you'll ever try to invest in. In terms of upside, it's probably better than anything. And even if we just took the 150-year price average, which is suppressed, or the ratio between the two of 42-1, even though it's coming out of the ground right now, it's 7-1, meaning 1 ounce of gold for every 7 ounces of silver in the ground. It used to be 16-1 for 5,000 years. And now it's depleting. So it's 7-1. With all of that being said, the last 100+ years, it's averaged, because of gold's role as money and silver's role in industry in the West, at about 42-1. So if you take gold right now at 33.75, up $20 today, 33.75 divided by 42, silver should be $80 an ounce right now. And that would represent the average price of the last 150 years. If you took the same gold price of 33.75 and divided it by 7, that's what it's coming out of the ground at $482. If you woke up tomorrow morning and silver was $482, people are saying, yeah, right, BS. That's the geologic ratio. Ask Keith Newmeyer if you ever talk to him. He's a buddy of mine. He'll tell you on your show publicly it's coming out of the ground at 7-1. He's the CEO of First Majestic. He says it to me all the time. So somewhere between that 7-1 and the historical ratio of 16-1, even the 42-1 average price ratio since the Industrial Revolution, we're way undervalued, way undervalued. And I don't know of another asset that offers the kind of value where you're seeing the biggest money in the world go to massive lengths, not only to accumulate it, to disintermediate it, and to repatriate it, and to stand for delivery. These things we've never seen before, but they're using the suppression of the paper market in order to do that. I think it's the trade of a generation. And if you really want to talk about a speculative trade where you can clean up, and especially for an IRA, you can trade your gold into silver. Why an IRA? Because there's no taxes involved in it. Those transactions are tax-free. You buy silver at 100-1. Of all it does is get to its 150-year average of 42-1. That's over a double. And if it gets anywhere near its geologic ratios, guys like Bix Weir say, well, you're talking 11 times undervalued silver is. And this is what happens when you suppress markets for an extended period of time. The difference is now these countries that are standing up to the West are coordinated, motivated, sophisticated, wealthy, and they know what we're doing. And so they're standing for delivery as a way, playing the long game to I think, subsidize their future endeavors and using not only their trade imbalances, but the dollars. And it's funny because like China, as an example, China, is now trying really, really hard to use dollars to buy gold and silver with, instead of putting the excess dollars and surplus into treasuries. In fact, they've even extended their import quotas for the banks. And so you have an inside source for the PBOC says that we've raised quotas for gold imports last month, which are and telling the banks to use dollars to go out and buy this, even telling them to go ahead and buy dollars in the open market and then use it to buy gold and silver, which then weakens the yuan, which is something that they want, strengthens the dollar, which is something they probably don't want. And then they'll go and buy gold with those dollars, which then raises the value of the gold that they've been buying. So this is a big deal. It really is. It's a big deal because the rest of the world, I think, understands, many of these countries in the BRICS in particular, understand that we've held down the price for far too long for various reasons, and they're using it against us by standing for delivery. And that's what Eric Young, King Kong, is saying. He's a brilliant man. He's saying that the Chinese are part of this suppression now too. They're using it just like the West is to stand for delivery on anything that's not nailed down. They're playing the long game. People in this country look at their portfolio and they think in terms of minutes and days. China and the rest of these countries are playing the long game in terms of years and positioning themselves using the last few days and hours of the Western pricing system against us to suppress the paper price and then stand for delivery, just like we see here on COMEX. Who's got $8 billion to stand for delivery on gold? And who's importing, the largest delivery in the history of the COMEX and silver on the May contract? Who's got that money? So you see that formation is called the cup and handle. The big cup part is the base building, and that's when it's that long. That's a very powerful technical factor. And you can see where the blue line is. It's right at the tip of the cup, right at the tip of the bowl before it breaks out. That is as bullish of a technical indicator, especially one that is that long in formation, as you could possibly get. So it is. And I remember one of the first speeches I ever did, I did with David Morgan. We did it together. And David and I used to speak together way back when. We would go to all the shows around, and I owe him a lot for my start speaking. Thank you, David, if you're watching. But he said to me once during one of our speeches, he said gold and silver have a 90% correlation throughout all of history. Not always symmetrical, but oftentimes one will go first and gold will go first, silver will go further. But you can see gold led the way. The formation is symmetrical to the extent of if you step back and look at it at a big the big picture. It isn't always symmetrical in the way they move. One may go first and for an extended period of time, and silver will catch up. But it's following exactly what he's saying. It's following that same bullish technical formation and ought to break out in a massive way. When you see these kinds of deliveries onto COMEX, instead of standing for a paper settlement, it should tell you the big money knows something's coming. They wouldn't stand for delivery. No one ever stood for delivery. Less than 1% of contracts stood for delivery my whole career. And now, just since November, the amount of gold and silver that's been delivered into the COMEX is record breaking every single month, it seems to be. So big money knows something's coming and would choose to have physical possession of it. And I think silver, there are very few things that you could ever invest in that not only have plurality in its use cases, whether it be military, industrial, monetary. Most commodities have one use case. Silver has several. And at the same time, it's depleting in nature. The biggest money in the world is standing for delivery. The second largest producer in the world is buying doré and concentrate halfway across the globe and then paying to ship it back to refine it. You can see, if you look closely enough, that the big money is using the suppression as a subsidy to stand for delivery and as a tool of misdirection. Nothing to see here, folks. But if that were the case, then why are we seeing the deliveries the way that we are? And why do we see the London Metals Exchange go from T plus 1 day settlement to T plus 8 weeks? Because they say it's a shortage of trucks and manpower. Well, no, that's not it. They're getting exposed for the fractional system that they are because of all of these deliveries, and they're scrambling. So while it may not happen today or tomorrow, the pieces are being put into place. You can easily see. I will stand by my statement. It's the trade of a generation. It is. There are very few things in life that, if all you do is just get back to historical averages, between gold and silver, you're looking at a double plus, almost 150% increase just to get back to 200-year averages. That would put silver at $80 right now, and that would still be at $80. It would still be 6 times undervalued geologically. So
yeah.
How high can it go? Well, I guess that's to be seen. But when you mess with interest rates and commodity prices the way that the West has, there will be consequences. And I'll leave people with one thought, and that is the BRICS Grain Exchange. The BRICS Grain Exchange was developed last year, and the guy developing it said, we produce and consume more grain than the West does, but we can't control the price. It's done on COMEX. But with the development of the grain exchange, that will change. Well, guess what? They're doing a metals exchange also, and they know exactly what we're doing. And that's why you're seeing so much volume on Shanghai. That's why you're seeing silver priced on Shanghai today. Where did I just put that? Today, the close yesterday was $36.36 an ounce in Shanghai. So if you're a trader and you can arbitrage, buy in the West and deliver in China, you will do that. And you're going to make a couple bucks an ounce on thousands and thousands and thousands of ounces. It's a good deal for your business, but that metal, that ain't ever coming back. And that's why they're doing this, is why they're arbitraging it the way that they are. So yeah, I don't sell gold and silver, Adam, for people to get wealthy. It is wealth. And it's being proven by the big money. And the fact that they're standing for delivery is what's different. No one ever did that. And that's how you disrupt and break the suppression chain, by standing for delivery, because the suppression is about naked shorting with a big pocketbook to overwhelm with contracts those that go long and keep shorting it, get a margin call. But if it's a sovereign wealth fund backed by the government of Saudi Arabia or China or Russia or whatever, well, that's okay. We'll pay the margin call, and then we're going to also stand for delivery. Thank you very much. And that's why London says, oh, but we have a shortage of trucks and we're supposed to deliver that. It should be moving in 3 days. It's now 8 weeks. You can see cracks are happening. So yeah, I don't think there's anything quite like silver out there.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed, The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.